In 2011, Canada, which has used generally accepted accounting principles, or GAAP for short, will change, and companies will be required to adopt international financial reporting standards, or if a private company meeting the criterions can adopt accounting standards for private enterprises, ASPE for short, as the entity's financial reporting framework. The revised standards must be applied for fiscal years beginning on or after January 1st, 2011. This means that 2010 fiscal years is the last calendar year end to apply to current Canadian GAAP. Companies will have to adopt either IFRS or ASPE. Early adoption is permitted. Whether the standards are adopted early, these standards must be applied as at the beginning of the comparative year included in the financial statements. Some of the more salient implications are: differential reporting is no longer included in ASPE as this standard is strictly for private enterprises. The currently available differential reporting options have been included in ASPE's framework. Fewer mandatory disclosures are required, placing more emphasis on professional judgment for the identification of the disclosures. Some complex standards have been simplified, including employee benefits and financial instruments, enabling private enterprises to achieve cost versus benefit gains. The new standards contain transitional guidance that must be applied to the beginning of the comparative year of adoption, and contain some optional elections which may provide some companies with a benefit as they shift to the new standard. The basic principle is that the company must apply the same accounting policies consistently from the opening balance sheet throughout all periods presented in the first financial statements that comply with the new standards, unless an optional or mandatory exemption is applied consistent with Section 1500 of the CICA Handbook. Optional exemptions include business combinations, fair value measurement of items classified as property, plant, or equipment, employee future benefits, financial instruments, stock-based compensation transactions, asset retirement obligations, and related party transactions. Mandatory exemptions include revision of estimates recorded under prior Canadian GAAP, non-controlling interest, and derecognition of financial assets and liabilities. It is important that any business, before adopting ASPE, thoroughly consider each optional and mandatory exemption presented in Section 1500, and consider the cost-benefit of adopting or not adopting a specific exemption, and the effect of these changes on debt covenants, banking agreements, and bonuses, and how to communicate these differences to lenders and other stakeholders. The new standards have been created with a focus on private companies' needs in Canada, which creates a framework addressing the needs of owners and their borrowing requirements, rather than the needs of equity-based financiers.